Welcome to the Your Money Personal Finance Podcast. I'm Peter Cishecki, the president of Everything Financial Group. We're at episode 14 today in our journey through the Omni formula. It's what we've been doing this year with all the episodes. And today we're going to talk about personal insurance, auto, home, really exciting stuff like that. And we're joined by Josh Krenus, president of the and CEO as well, got to get them all in there, of the Alteri Insurance Group. He was here last year talking to us about this, and he's going to answer some more key specific questions relating to today's topic about personal insurance. So with that, welcome, Josh.
Yeah, thanks for having me.
Back in the hot seat again this year.
Yeah,
except this year we get to do it in person.
Yeah, I know. That's great.
Last year was that Zoom thing. There was some pandemic craps going on.
Yeah, I heard there was a bug going around.
There's a bug going around. Yeah, it was. And now people just get normal sick.
Yeah, exactly.
So personal insurance. Let's talk first some basics today and kind of teach people the basics and to ask the questions when they go in and they're going to renew insurance or purchase new insurance.
Yeah, sure.
The questions they're supposed to ask that they didn't even know they're supposed to ask.
Yeah.
So with that, what is the real difference between, if you want to call it this, I'm probably a little wrong on this, but correct me, a basic insurance or something that's more of a comprehensive plan when you're dealing with home insurance?
Yeah, that's a good question. So there's really two different types of plans, if you will, when you're talking about home insurance. There's comprehensive, as you mentioned, and then there's broad. So if we just look at, if we just go backwards and think about what a home insurance policy actually is, it's at its base, it's a fire policy. So that's why it was created. That's still why people have it. And anything in addition to that, you like to think is added on as an endorsement, if you will. So a broad policy is a fire policy with a bunch of it's actually, if we're getting technical, there's 17 things on that policy.
Yeah, let's list all those, shall we?
Yeah, that's covered. So those 17 things are covered, and that's really it. It's very basic, broad. When you look at comprehensive, it's just jazzed up. It's got a bunch of things in there, such as coverage for different sub items you wouldn't think. So jewelry and bikes and collections that you may have, things like that. So comprehensive is just a beefed up version of it.
So a broad policy is a 74 Pinto, which we all know about from our days in high school.
Yeah.
And a comprehensive policy is more like a Bentley.
Exactly. And interesting point to note on that is you're not paying that drastic of a difference for that policy. So it's important to note that even though it does have extra coverage built into it, it's not as it's not thousands of dollars difference. It's usually hundreds.
Now, before we move on to some of those other follow-up questions of this, I know when we get a lot of people coming in when we're doing the Omni formula and Everything Financial does not sell any of this insurance.
Yeah.
To be full disclosure, we do not get compensated when we send clients to your company.
No.
And we met through a common representation in the media world. So, But I know when I send your team a lot of clients and I tell them, check if you have comprehensive, or I say basic, but now I know to tell it broad.
Yeah.
And a lot of people have just a broad basic policy. And is that really because kind of a lot of maybe junior or less experienced brokers are kind of selling on the path of least resistance? Like, this is the cheapest. But as I always tell people, ask the questions, because from what I've learned from you over the years, like you said, the cost is not that much different that you should pay the extra couple $100 a year or whatever that amounts to, 10, 20 bucks a month or whatever the case may be.
I think that that could be the case. What I've seen a lot of is if you want to win, I mean, we're getting maybe too technical, but if you do want to win someone's business in the insurance world for their home insurance business and you want to be, say, sketchy about it, you would change the rebuild value. So the value it costs to rebuild the home. So I know you have a beautiful home. If let's just say that the rebuild cost for the average Vancouver home, just the structure,
just for the closet.
Yeah, exactly. But let's say just the structure itself is, so forget about the land value and all that. Call it like $750,000 to $1 million to rebuild the structure.
Right.
Let's just say that. You're going to pay on that $1 million. There's a premium to that. If you drop it to $750,000, there's a less premium, obviously, for that. So what we see a lot of when we're competing on business is that rebuild value is way too low for the client. and that affects the premium, and therefore the client, not being very educated on the matter, thinks, well, your premium is significantly higher than this premium, so I'm going to go with this one because it's a rebuild value.
Never knew. So when we're doing our Omni formula, and we have a section in there about insurance, again, one of those questions you should ask that you didn't know you're supposed to ask, didn't even know, would be for people to say on a policy, what's my rebuild value? That's
Exactly.
the question to really ask then, because then, because we talked about this one last year. That reminds me of the one where I got an example from a Vancouver fire captain who said, they attended a fire. They couldn't save the house. They were lucky enough to save the neighbors' houses in this case.
Yeah.
And they went back to check on the person, as they kind of do, to see if there's anything they could do. And the people had to spend a couple $100,000 to just get the house back to the way it was.
Yeah.
So that would mean, I guess, you're the expert, not me on this.
Yeah.
They didn't have the rebuild value where they should have on the house. So just to get the same baseboards or the same taps or
100%
door handles or whatever the case may be,
100%.
They had to add money in.
Yeah, so that's called, there is a clause on that for the rebuild value. You need to be, it's a co-insurance clause. So you need to be up to 90% of what the value is going to be if it needs to be rebuilt. So in this case, if it's $1 million structure and it actually costs you, let's say like 1.5 to rebuild it, the insurance company is only going to go up to 90% of it.
Of 90% of the million or 90% of the 1.5?
Should be, right? So you should have been paying premiums on the 1.5, but you'd only been paying on the $1 million. So the insurance company is going to backfire you on that. And they're going to say, no,
really?
It's not going to work now.
So that is something.
So it's very important. And I just wanted to mention on the broad comment.
Wow. On
the broad comment, there is two different kind of outlooks, I would say. Like we have clients that, are, money's not an issue to them. Like they get broad policies because the only way they're going to claim is if that house goes to zero.
Completely down, yeah.
That's it. So they're like, give me the basic one for fire and earthquake. That's what I'll do. And I'm going to pay the least amount that I can because I'm never going to claim on this thing unless it totally goes to the ground, which is fine. Other people have tons of art and jewelry and toys and beautiful homes that they are going to claim if something happens. And there's no wrong answer, but it's just really important to have the right advice based on who that person is.
Wow. Well, then that's something we're definitely going to add in for viewers and listeners is a description of how this works, because I never had a clue about that. And, it's like you said, it's not that there's right or wrong answer, but our whole goal is keeping the people informed and knowing, and I know your team does a great job of that, but I know others, unfortunately, don't. And I don't think there's any ill will or bad intent by other insurance people. I think a lot of it is just probably a lack of education to the person at the front counter.
For sure.
Sell this way and just present it this way.
Yeah.
Because I can already tell how much education would have to go into it to learn all these other ins and outs. So
no, for sure.
With that though, you said fire, theft, flood, etc. What really happens? You've bought this great insurance policy and suddenly you have a theft. I mean, fire's fire. Your house is, for the most part, you're toast. Let's just be glad you escaped and don't worry about anything else.
For sure.
But flood or theft, what happens with rates? You've had this policy for 1 year, 2 years, whatever.
Yeah.
Pipe bursts, someone breaks into your house, you have a claim.
Yeah.
And you hear horror stories of what's going to happen to your rates the next year. Yeah. What really happens to rates the next year?
Yeah, that's a good question. I think it depends on two things: the insurance company that you're dealing with and the type of policy that you purchased. So when you're dealing with certain insurance companies, a lot of them have that claims-free situation. So they'll wipe anything that happens to your first claim. So the following year, they don't touch it. That's some insurance companies. Another thing that happens, you can pay for an endorsement on your policy if you are concerned in advance. If that company doesn't offer it, that covers you for your first claim. A good broker on renewal will go to the insurance company and say, okay, we had this claim, but this is the premium they paid. They paid their deductible. Everything's good now. Here's like the fixes that happened and everything regarding the claim. If we see a rate increase of more than like 5%, which is standard for inflation every year.
No. It's called just inflation.
Yeah, just inflation. Yeah. Yeah. Let's switch to the,
let's not get political at all.
Yeah. So if that, happens, we're going to leave and we're going to go to another insurance company. Because I mean, there's a lot of insurance companies, as a client, you have choices. They know that. So it's our broker's job to fight for that.
It's like though in health and dental, when we're dealing with health and dental for our corporate clients, and I know this happens, there's brokers out there who will just to get the bigger first year sales commission, they switch them every couple of years to a new company.
Yeah.
And insurance companies in the health and dental world, they talk.
Yeah.
So you got to think if someone kept having claims,
yeah,
eventually it's going to catch up to them if they're going from
and
company
I think,
to company to company.
Your broker too will start to think like, well, there's a claim every year.
Client?
Like, what's going on, right? But no, it's definitely our job to try to keep rates down and to suggest that. And that actually happens when you do make that claim. So it's good to like understand, okay, what happened? What's your deductible? What do we think the rough cost is going to be? And what's going to happen next year? And, if you have like $100,000 claim or something, then that's going to be worth it. But if someone came in and stole a TV, that's, worth a couple grand and your deductible is maybe $1,000. Well,
go to your big box store and get a new TV.
Yeah, exactly. You might want to wait on that.
Yeah. So we're always looking at ways to help our clients kind of get more bang for the buck. We're always showing them how to save money when it comes to built-in embedded fees with investments or insurance, like life insurance and disability and everything else. Mm-hmm. So what are some automatic things people should ask, things they should look for to help them save on premiums, but still get quality in the insurance? What are ways to manipulate the plan in a good way without, though, this going to such a low rebuild?
Yes.
They're going to get stung. Now that I know that
terminology,
they're going to get stung later on because, I saved a fortune. I got a $500,000 rebuild. Oh yeah, but it's $2 million to rebuild.
Yeah,
my
exactly.
house.
But
So,
it's huge.
so now I owe an extra whack of money.
Yeah.
So what are some automatic things people can ask?
I think the important thing is to understand what's important to you with regards to it. So like we were talking about, if you're never going to claim unless the whole thing goes down, I would suggest making your deductible very high because that's going to drive premiums way down.
Okay.
And let's be honest, if your house, needs to be rebuilt and you have to come up with $25,000, that's a very good situation. If you're getting $1 million in return, that's one thing. So a deductible.
Okay.
Consider when you would claim and make it as high as possible for your situation. Secondly, what I would do is I would look at what kind of endorsements you're adding and if those are important to you. So endorsements such as overland water, as opposed to water damage. So water damage, anything that happens in-house with like piping or anything like that bursts, that's water damage. That's included in every broad or comprehensive policy.
Okay.
Overland water is water from outside coming in. So that needs to be added to your policy. So if there's a heavy rainfall and you have a basement and some reason it
We live on the West Coast. How is that even possible?
Yeah, exactly. It doesn't rain here at all.
No, like yesterday.
Yeah, exactly. So is that important? Do you have a basement? All that kind of stuff.
What about city though? That made me think of a client who had that happen where'd the burst occur?
Yeah.
In the house or past the shutoff or something? There was some story like that.
Yeah.
So how is that different?
There is a city line coverage on there. Depending on the insurance company, it's either built in or endorsed, and that's just the broker's job to know that. And those kind of endorsements, if you have, let's say, like we keep talking about, if you have some sort of like a lot of jewelry, like let's say you have a lot of nice watches and you want to make sure that they're covered. There's certain insurance companies that I won't name right now, but they have really good built-in.
They don't deserve a free plug. They didn't pay for it.
No, exactly. They have a lot of like good built-in sub-limit stuff for jewelry. So some of them are even unlimited. So for you to add this Rolex as a sub item and pay an extra $1,000 a year for this Rolex, that's just a waste of money. It's already built in if we just change insurance companies.
Oh, okay.
So that's, these kind of things, again, it just comes down to the client, what's important to you, and then your broker should be telling you which, and show you the options. Just show you a few options to show you that like, hey, this is cheaper, but you don't get that watch included. It's going to cost another $1,000 to do that. This one's all built in. Which one do you like? Okay.
So with those items that affect the plan and so on, how does earthquake, and I know we've touched on this last year, but I can remember because earthquake is based on, isn't it based on the deductible is a percentage of the rebuild?
Yeah, exactly. So again, that percentage, which nowadays is the lowest you can usually get is around 10% right now. It used to be 5, 10, 15, 20, 25. Now the lowest you can get is 10. And a lot of insurance companies are flat 25. They're just like, you can't get more than.
So I guess it depends on where your house is, really.
Yeah, well, for sure.
Well, you don't know for sure, but I know where I live, up the coast, past Whistler.
Yeah.
Theoretically, I should be good for an earthquake, you would think.
Yeah, exactly.
Up there, because I'm not in Richmond where the land is like a sift and your household is.
Richmond, obviously, for obvious reasons, is very hard to get there and quite expensive. BC is actually dealing right now with a bit of a problem with earthquake and selling it. They have all these insurance companies have reinsurance, and they all buy their reinsurance globally. Right. And BC is capped. So the reinsurance markets are saying no more dollars are going into BC because scientifically there's a year it's going to happen and it hasn't happened. And we have a
it's
ton
not
of
if
money.
It's when.
Yeah. So they're struggling right now. And one of the insurance companies, again, I won't name it, just recently was purchased and dissolved. And so there's a bunch of people that just came into the marketplace that just lost their policies and are being picked up by smaller insurance companies, and they can't sell them earthquake, which they used to have it with this old company, but now they can't buy it. It's impossible because there's no more money out there for the earthquake. So renewals you're seeing with existing policyholders, you're going to see this come up to like, I wouldn't be surprised if it's 100% increase on your earthquake next year if you do have it right now.
Wow. Well, hopefully, like I said, and I guess my last house, I didn't have it either because we talked to you guys, the way the house was built into a mountain. I mean, it would have taken a 9.0 to have the house even move. So
yeah. And again, that's
depends
a personal,
on where you live.
That's a personal talk, right?
Yeah.
To see what's
well,
important.
I sold it, so I'm fine.
Yeah, exactly. Yeah.
We did have one tremor when we lived there.
Yeah.
And our house didn't even...
Nothing.
And our neighbors were freaking out.
Yeah.
Their house was wood, ours was concrete.
I know. Earthquake is a funny one. Everybody has such a strong opinion with home insurance on whether to do it or not. And again, I don't have that answer. I put it on my house, but I was able to get it, and it wasn't that expensive.
And don't lose it now.
I know, yeah.
So how does coverage work for people? And we have a ton of this, obviously, in BC because of the housing market, with people who live in a strata. So traditionally they buy a condo, or they buy a townhouse.
Yeah.
So it's all run by strata.
Yeah.
And I guess the building is insured by the insurance the strata has.
Yeah.
But you're still buying home insurance. So how is that different?
It's a good question. We get that all the time. So the strata building, which is essentially in BC, if condo owners come together to own individual units inside of a building, the government mandates that you create a strata. And a strata is nothing more than a corporation that oversees, this building.
Okay.
That strata needs to get everything else a business needs to get. They need to have liability insurance. They need to get insurance for the property that they own, i.e. the building. And they need to get director's insurance. They put this all together into this one master policy, we call it. And as far as condo owners are concerned, there's really only a couple things they should be concerned about on that policy. One, again, it goes back to the rebuild. What happens if this whole thing goes down? Are we going to get our structure rebuilt? So that's number one. Number two is, what are their deductibles? Because, the strata corporation is fed monthly fees, obviously, as you know, for maintenance and, landscaping and painting and all this kind of stuff. But if the worst happens and you need to claim on this deductible, these deductibles are hundreds of thousands of dollars. And that goes to the owners of the strata, which is all the individual unit owners. Your individual condo policy has a strata deductible assessment built into it. So you have to make sure that that line item on your condo policy matches what it is on the strata policy. And that is, it's not even clear sometimes. You need to make the calculation. So your broker needs to know what he's doing with regards to that calculation.
So as soon as they know you live in a strata, they should be making sure the one policy matches the other where it has to. And that's not something theoretically you as the purchaser should have to worry about once they know you're living in a strata.
100%. So we've had clients where they live on the third floor of maybe a 5-story kind of condo building. They are the reason for the loss and the water goes down. It could be really anything though. It could be an overflowing tub or your toilet just acted up or something and it goes down and affects other units. If they claim on that, the strata corporation won't go to every individual unit owner. They'll just go after you. They'll just say, you pay the deductible now in the master policy and we'll fix everything. And sometimes that can be like, hundreds of thousands of dollars, like I was saying. So if they're a very common deductible on a strata policy for water loss is $250,000. If your condo policy doesn't cover that $250,000, it's just simple as it's just coming back to you. You got to pay that money. So you got to be careful. There's top-up policies too. If your condo policy only covers $100,000 and your broker realizes the strata needs $250,000, you have to buy $150,000, just a standalone policy just for that purpose, which we offer too.
Jeez, a lot to know. Let's switch gears to the thing we all know and love, ICBC.
Oh yes, beautiful.
But the difference really between ICBC for all your car insurance, which don't even get me going with some of the things they've done recently. We'll talk about claims in a minute.
For sure.
But ICBC, what you have to have and what you should look at and where you should look for third-party coverage. So the things you don't need to have through ICBC.
Yeah. Compulsory coverage through ICBC is what we call basic coverage, quote unquote basic, which is just third-party liability. That's all you need to buy. You don't need to buy anything to do with your asset that you own or lease or whatever. You don't have to have that. All you need is liability. And generally speaking, it's anywhere between $1,000 to like $2,000 for the average driver, just for that one line item. What you can shop around is your collision, comprehensive, and excess liability. So, if you want more liability than what ICBC is offering you, which is only like $200,000 you have to buy through ICBC, that's it.
Wait, that's going to work in a claim.
Yeah, exactly. So you can go to third parties and say, okay, I want an extra, 1.8 or 2.8, 3.8. You get to like 2, 3, 4, 5 million. You can buy that. You can buy collision and you can buy comprehensive. All that can be sourced out through third-party companies. In BC, there's only 3 of them right now that offer it outside of ICBC.
But you do have a choice at least.
You do.
And are they, without naming them, are they relatively close in cost, service, quality of policy for these other companies?
Yeah, I think they have a lot more to lose than a Crown Corp. So I think that they're like any other, they are kind of all 3 of them. I'm thinking in my head, all of them except for one maybe, they're kind of small businesses. So they do care. We've seen some excellent claim service from them and excellent renewal pricing. The body shops they work with are great. They're very good companies. A lot of clients I find have trouble understanding the fact that they're going to put 2 policies in their glove box. They don't love that idea. I'm not sure why.
I don't know, because if I could get rid of ICBC completely, I would in a second.
Yeah, exactly. I think that'll be an interesting vote whenever that comes.
What can be wrong? The government's involved in it running your insurance. How could anything go wrong with that?
Yeah, exactly.
It can't be crooked.
Yeah, no, not at all. Not at all. But yeah, there's definitely options out there. And for some drivers, I would honestly suggest seriously looking at them. Ask your broker to look at them because the price savings is great.
Yeah, and look at what happens to people in the province next door when you find out what they pay for car insurance.
Oh, it's so true.
Versus what we pay.
Yeah.
And tell me that having a Crown Corporation running your insurance isn't a bad thing.
Oh, yeah.
It just, I can't believe what we pay.
It is terrible. It's a crisis.
And we have more people here than they have. So you think we would be spreading the risk.
Yeah.
But we pay way more.
We do, I think. So obviously ICBC has gone back, and regardless of what we think, what they've said is that the losses have just gotten out of control and they have to recoup these losses. And the losses are coming from, legal companies going after them for the big claims, the multi-million-dollar claims. It's not the John Does or Jane Smiths on the street hitting each other and fixing the cars. It's the big liability claims, which they capped obviously in May.
Which brings me to my next question. Yeah. Actually, so there you go.
Go ahead.
Yeah. How does that work now? I get the theory behind capping claims so that someone who gets hurt, neck injury, head injury, I don't know, the whole list of probably 17 or more of those, but they can only claim so much. But what does a person do who truly has a real claim?
Yeah.
And their life is not over, but their life is over, if you know what I mean, because the claim is so serious. They are definitely not getting back to work anytime in the near future or ever. And ICBC says, but you can only claim $50. I don't know what the amount is.
Totally.
But is there any way they can insure themselves to be able to claim more?
Yeah,
or sue for more or whatever the case may be?
It's a good question. I think that their new plan is small injury caps are about $5,000. So, the scary part of it, I think, for consumers is that it's a subjective basis.
Well, I was just going to say, who decides on what a small injury
That's right.
cap and claim is?
The lawyers do. So, I mean, that's kind of scary, right?
What, the ICBC lawyers in this case?
Yeah.
Oh, because they're not biased.
No,
They're
not
completely fair. Like, come on, people.
Yeah. No, I think it's, so what happened? So they capped the claims. They're going to make a decision on it. It becomes no fault, meaning you can't sue each other. ICBC is going to settle the case. They came out with this thing called enhanced care. So what they're saying is, yes, we've capped the injury, but if you can't work, we have built-in enhanced care. So we're gonna pay you monthly payments or take care of you until you can get back to who you are. Now,
that's actually not on the surface the worst thing in the world, because you're
not the worst thing.
Helping someone realizing you can't fake it.
Yeah.
And we will help you to get back to work.
That's right.
So you don't have someone staying home for 4 years hoping to cash in on $500,000.
That's right. I think what's important though is we don't really know, because there's not enough experience with it yet. We don't really know what this means. So it's more important than ever for clients like you have to go to you and make sure their disability insurance is great, because how many people in Vancouver are, they're making well over $100,000 a year. And if they get injured, I can't imagine that whatever's going to come out of their car insurance is going to be.
Oh, so that was my next question. Do we know what this enhanced care
No, we don't.
is?
I mean, there's fine print, which, everything's going to be a battle, right? So you should have a standalone policy. Yeah, exactly. So I would personally look into your own personal situation if that was the case. But the auto insurance is they're rooted in. We're going to start looking at small claims way heavier now. We're not going to pay out these huge claims, but we're going to built in enhanced care that's going to take care of you.
So, we talked about the limited liability, your 250 or whatever with ICBC, your enhanced upgraded liability with another company, because I'm still as clear as mud here. That's what I don't do for a living. That's why you're here. So if you buy this extra coverage, and we may not know the answer yet, is that going to allow you to sue another driver, or because you do have a more serious injury for a bigger claim, or are you SOL because they're insured with ICBC?
It's true. So generally speaking, what happens is when you're dealing with collision or comprehensive, it's pretty straightforward. If you're with a third party, go to the body shop, you get it fixed. So
that part's easy.
Yeah, you each deal with your companies. That's it. When there's a liability claim, and let's say you have a third party excess, what they're going to do is ICBC has to claim first. So it's always going to be ICBC because they have the first 200,000. So they have to determine if it's going to surpass 200,000. They'll keep that third party company in check, and they'll keep them on the same page and all their investigation, et cetera. Once it hits 200,000, sometimes what ICBC will do, which we've seen actually with one of our policyholders, ICBC will just pay out the 200,000, and they'll say, "Okay, good luck on the rest of the 1.8 million," kind of thing. And then you're starting the process all over again.
That was going to be my question, because and this might be for a lawyer, but say ICBC says you get 10 grand, too bad.
Yeah,
bye. We don't care.
Yeah.
We care, but we don't care, right? And can you sue civilly the other driver because your limb's still hanging here and you get the head injury and you're drooling out the side of your mouth?
Yeah, for sure. And your third party insurance company, is not subject to the rules set by ICBC for their company, so they will probably do that. They're going to go after that other driver.
Well, this has been a good learning experience, and I did learn in a half hour here. I learned a ton.
Yeah, good.
I didn't know, but that's usually because I just call you and your team and say,
exactly.
Fix it. Here, take care of it. Make sure I have everything I need. So that does it for episode 14. Encourage people to go to wherever they see podcasts, go to the Everything Financial Group channel on YouTube. View Josh from last year, because I know there's a lot of information there. We'll definitely have you on in future episodes when we kind of go a following season where, we want to talk about specific things that pop up, and people also pay attention. You can always stop the the video here and look at all Josh's contact information, I would encourage you to reach out to his team for your personal home and auto insurance needs. They do a great job, and look us up at everythingfinancial.com, White Rock, Langley, Victoria, Arizona, wherever you want to find us, reach out and we'll be happy to sit down with you. And thanks again.
Thank you.